Hi and welcome to this Blueberry Markets video update with me, 𝖢𝖥𝖣yi, Senior Market Analyst. In this video I'm going to take you through the week ahead. We're going to take a look at that data coming up this week, and we're also going to take a look at some charts of interest. So obviously we have to talk a little bit about what happened last week. Obviously the NFP numbers came in a lot higher than estimates actually. We came in at 275k, surpassing those previous estimates. However, January's job numbers were revised down from 353 to 229k, and the average hourly earnings came down significantly. So that kind of compounded a little bit of dollar weakness after NFP. We did see a little bit of a comeback from the US dollar after that though, so it's going to be an interesting week, especially the fact as well we've got a heavy amount of dollar data coming up. We've got core CPI, we've got CPI and CPI year on year, we also have PPI and retail sales out this month, and some more unemployment claims as well. So it's going to be a very, very interesting week for the US dollar coming up. Can the US dollar recover, or is it the weakness that we're seeing, is that going to be compounded this week? We can see that estimates are suggesting that we are going to see a slight increase on CPI month on month, slight decrease on core, and CPI year on year is meant to be held at 3.1%, and PPI is meant to drop from 0.5% to 0.2%. However, core retail sales is expected to climb a little bit. So in data times, in terms of forecasts, it's showing a little bit of a mixed data week. I think if obviously we see this kind of poor run of data continue for the dollar, then that weakness could continue going into this trading week. However, we could see a slight recovery if we do see any kind of early indications that data is going to be good again. In the UK, we've got GDP data month on month. UK had the budget last week as well, and we saw cable climb higher. GDP expected to climb from minus 0.1% to 0.2%. Heading over to the currency strength meter then, big drop in the US dollar. Obviously that was a pretty obvious one that occurred last week. Significant strength in the Australian dollar as well, and that has actually come up into being the strongest currency at the moment, as well as the pound as well, being one of the stronger currencies in here. So pound Oz seems to be pretty good ones to watch going into next week. In terms of weak currencies, obviously the US dollar, the Canadian dollars continue to find that weakness as well, and as well as the Swiss franc being in that reversal zone. So if you want to check out the currency heat map going into the VIP trading room this week, then you can head over there. Going on to the US dollar index as well. So this is what we saw. I was pretty interested in longs in the dollar as long as price stayed above 103.50. I said if we breach 103.50, it's probably going to be bad news and I need to switch that bias. So for the remainder of last week, from Wednesday onwards, it was pretty bearish US dollar. We saw that kind of continuation down. We're now at the 102.75 level of support now, and we did kind of hold above that level, but is that just Friday profit taking? Are we going to see the continuation going into this week? If we do, 102s could be tested, even move down towards the 101s could be something to watch if that data compounds that dollar weakness. If we see some kind of recovery, I don't expect anything kind of aggressively higher, maybe sort of a hold around about the 103.50s. That could then drive continuations lower as well in the US. Going on to cable then, so cable traders very happy. Obviously longs down at the 125.25 level would have been great, especially because they were range lows at the time. Broke that range high now into the 1.2s. Next level of resistance I can see is here around about the 1.2940 and above. These seem to be those kind of high that formed in August. Seems to be the one that is sort of next on the watch list for traders, I guess. We've also got the highs here in July, which could be under threat if we do see that dollar weakness continue and pound data to be good. Going on to euro dollar as well, we favoured euro longs last week. We were looking at sort of long opportunities as long as kind of price stayed above this 1.08, which obviously it has done. It's now breached those recently formed highs at 1.0900 as well, all this support and resistance as well in the past. We've come up into the key area of resistance now at 1.0975, but you know, that could be easily tested going into this week. We could see a move up towards the 1.1s. A breach of that, we've got the 1.11 is the next level of resistance. Going on to gold then. So this is our final kind of market to look at this week. Very, very heavy aggressive longs coming into gold. I actually take a little look at the commitment of traders report. Obviously the next release doesn't come out until Tuesday of this week. Commitment of traders report is a good report to look at, but it is lagging as well, but it tells us where everybody's positioned. So I'll be interested to see if there is any aggressive selling coming in the market, because as gold prices rise, we should expect selling to also rise. And if we see selling come into extreme levels, that could signify a potential turnaround in this gold price. But at the moment, volumes are high in gold. I don't really expect too much of a comeback. I mean, if we can kind of pull back towards this area here and close below the one spot 21.50, that could invite a little bit of profit taking, maybe a move down towards the 2085. But at the moment, gold seems to be the one to watch, and we could expect sort of continuations. So I expect if we do see any kind of downside this week, it could be met with buying pressure once again. Thanks for watching this video update. I really hope you enjoyed it. You can find more information in the VIP trading room if you are a Blueberry Markets client. If you are watching on YouTube, hit that subscribe button, and I'll catch you in the next video.